Welcome back to Brashonomics. People who listen to the show are obviously out looking for opportunity, and we try to bring opportunities to our listeners, and not just in actual investments or actual interest rates or properties, but in the people you have the opportunity to work with. Kathleen Miller joins us, who's published 2 books, was recently honored with the Influencer Award by Financial Planning Magazine, and considered to be one of the top 100 wealth advisors by Worth Magazine. Well, first, welcome back, Kathleen. How are you?
Thank you. Good.
Good to see you.
Good.
You Google yourself?
I have. It's
Yeah?
always interesting, and I think it's important to do.
With a name like Kathleen Miller, you're probably not the only one out there.
No, I'm not.
So, it changes the scope of it a little bit, right?
Well, it does. And whenever I've signed any closing documents, I have to sign 15 pages saying I'm not this other Kathleen Miller. But people, I think if they're looking for something, they're going to go deep.
Yeah. Well, let's talk about looking for something, because really, part of your job in helping people increase their net worth, increase their wealth, is to help them find good investments, find sound strategies. Let's talk about that for a little bit.
Right. I think my job really is to help people keep what they make. And, you can make money, a lot of money in various places, but the real issue is, do you keep it? And so I thought in light of the recent election, I would make a few comments about investing today, because I said you should fish where the fish are. And I said the first thing I think is to review what the purpose or what the objective of your portfolio is. And there are really 4 ways that people define that. Is it capital preservation? Is it capital appreciation? Is it current income? Or is it some kind of tax control or planning? And so you really need to prioritize those so that you know what kind of investments you really want to have. And the second thing, you need to look at the time horizon. Is it 1 month? Is it 1 year? Is it 3 to 5 years? Or is it more than 5 years? So if someone's in their 30s and they're saving for retirement, obviously they have a growth strategy in that might be different than their 1 year allocation of money. And then we also look at their risk tolerance. People talk about what their risk tolerance is, but you really need to fine-tune that. And in the case of investing with the client, I think it's important to do an investment policy statement for them to really determine, is it income? Is it tax-free income? Is it tax-deferred income? Is it growth? What do they really want with this pool of capital that they've defined with a certain time horizon? And so I always say that you should take time and money and investing, and you'll have financial independence over time. It's a quote that Vanita Van Caspel made years and years ago, and I think it still holds true today.
Okay, you bring up these 4 points. I just want to hit on this without just grazing over them. Capital preservation, capital appreciation, current income, and tax control.
Right.
Let's just hit on that for a second. So, capital preservation is keep the money you got.
You don't want to lose it.
Okay.
You absolutely do not want to be in the elevator where it can go up and down. That means FDIC insured.
Super safe mattress money almost.
Absolutely.
Okay, and then you talk about appreciation, which is that's where you're trying to make more money.
Right. So let's take, let me use Apple as an example. Apple stock this past 52 weeks is traded between $353 a share and $705 a share.
This week?
No, in the last 52 weeks.
Oh, okay.
And right now it's trading about $540. Everybody wanted Apple stock when it was at $705. The smart thing, if you know you want that type of stock of technology, then what you need to do is put a limit order in and wait. I think it's a perfect time to be starting to look at buying the stock. So it's just knowing your time horizon, knowing your risk tolerance, and that's a stock you'd buy for appreciation. However, it also has a 2% dividend, which is a good thing. Buy Facebook. That's a growth stock if you believe.
If you believe in the social media revolution?
Well, if you believe in the Facebook model.
Yeah, of trying to figure out how to make money now that everybody's there?
Right. Well, there are about 800 million shares that are going to come on the market very, very soon from insiders. So I think the next few days will be interesting to see just what the commitment to that social media stock really is.
So, okay, so you have these, so it sounds to me that what you're saying is you have these different kind of, these different pieces of your financial puzzle, and each of them has different time horizons on them.
Right.
And it probably holds true with everybody. I mean, even if you're 25 years old and just starting, you still want to make sure you have that safety money. You lose your job, you get sick.
Right.
And then maybe you have more into the appreciation, but not so much into the current income puzzle piece is really your job.
Right. Well, for example, I get someone who is saving for a house, and they need to get a $75,000 in the next year. And what do they do with their interim cash? Do they invest it, take their chances with a Facebook or Apple, or do they keep it in a very safe, secure place? I mean, if your expectation is less than 1 year for a stock, to me, that's somewhat like gambling. You can get it right, but you might not get it right, and then you might not have the cash that you need for that particular purpose. And so it's really aligning the objectives and the risk tolerance.
So when you talk about the risk tolerance and objectives, it always, with money, and you just brought up gambling and the fact that people are, the emotional purchases, there's still that need for instant gratification for a lot of people, isn't there?
Absolutely. I mean, whether you're in
I mean, it's fun to say, oh, yeah, I bought Apple and now it's up, or I bought Facebook and it's up. And there's that gratification of maybe not only making the money, but having the discussion with people. I mean, there's it's almost like, it is kind of like gambling. You go to the blackjack table with your buddies and everybody comes back 20 minutes later, oh, I won. And, then you got to buy the drinks. But,
right.
you know who won and lost in your group.
Yeah. Well, what do you sell? I was in a casino last week with my sister-in-law who loves to go to the casino. And I went in with my limited $100, and I said, when it's over, it's over. I put it in the envelope, and it was over in about an hour and a half.
That's pretty good.
Yeah, I thought I held out a long time.
Yeah.
At one time, I thought, no, I'll go to 200. But I said, no, they're obviously winning on this one. But I set a limit, and I walked out. Now, she, on the other hand, goes to the casino several times a week, and we can never find out. She always is winning.
Sure.
But by how much? And I value, what do you have? You started with this in your envelope, and do you still have it?
Yeah, I think that's how most people measure it.
Yes.
Except for the people who lose gambling, who tend to always think they're winning, and they forget the time they lost.
Well, one of the things about a stock or a bond is you know what it's worth on a given day. And, you don't know that in real estate. So when you make money in real estate, I think it's really good to reevaluate what your objective is, if it's an investment property, and come back and allocate it between those buckets.
We're here with Kathleen Miller, CFP, owner and founder of Miller Advisors, publisher of author of 2 books. So, Kathleen, okay, so, you talk about the uncertainty, you talk about the potential for people wanting this instant gratification. There's always uncertainty in the market. I mean, in some ways, there is some element of gambling. What is all the uncertainty that people are looking at right now? Well,
I think uncertainty and corrections in markets are also an opportunity, and that's why you keep cash so you can take advantage of it. We were all talking about the election, and then it was, now we've got Petraeus scandal. Then we were talking about, Europe, the
fiscal cliffs,
the fiscal cliff, and on and on and on. But meanwhile, if you look at what's going on in the markets, they've had actually a very good year this year, and corrections are healthy because it allows you to reallocate. And this is going to be an exciting year end, so we see what we really do with the fiscal cliff. So watch what's going on in the markets, because people with big positions, long-term capital gains, may be selling at the end of this year, which could stimulate more activity in the market. So just, to me, if you're investing for more than 1 year. You're really doing a little more long-term.
Otherwise, you're gambling.
In my mind, yes.
So you actually made this point, and I think it's important to say, because you talk about European crisis and the fiscal cliff and whatever else they're going to throw all over the news and scare you. And we just have about a minute left, but you can't plug that. You said you can't plug this information into a spreadsheet.
No, you can't. And most times the market has already incorporated some of these fears into its valuation of a stock. And at the end of the day, I think it's important to look at the fundamentals and to say, maybe this, am I buying low with the expectation that it's going to go up, and that you have a really sound reason for why you're buying it. And in this day and age, I'd be buying something that people are using as opposed to something that's very speculative.
Sure. I mean, it kind of gets back to, I guess, why people buy things that they use, right? Isn't that one of those one of those ideas, buy something you like.
Right. That's what Warren Buffett always says.
Well, he's a smart guy. I guess that's a good person to follow. Kathleen, thanks so much for joining us. Again, Kathleen Miller, owner and founder of Miller Advisors. When we come back, a lot of people maybe were looking for properties. Maybe you made a bunch of money in the stock market, or maybe you're just thinking about how to prepare for the upcoming spring and summer after we get through the winter with your house. We'll be right back. We're going to give you some tips on some popular ways you can start planning for your next home project. We'll be right back.